Welcome back to the series where I'm teaching my friend Josh how to become a consistently profitable trader in the stock market. Now, over the last month and a half, I've essentially taken you from knowing nothing about trading to now to the point where you are almost ready to
from zero to hero
to actively hopefully start making money, right? That is the goal, to become consistently profitable. You are only missing one piece to the puzzle, and that is what we are going to be going over today. We're going to be talking about my edge in the stock market. Now, I think the word edge is misconstrued a lot on the internet when it comes to trading, so we're going to clarify what that actually is, get you all set up and ready to go. So essentially, you have 50% of my trading system as a whole. You've learned over the last 8 episodes everything you need to know, except this one very important piece of the puzzle. So I just wanted to say that if you guys are trying to follow along with this series, we are doing our best part in making it as easy as possible to structure it in the way that you can follow along with Josh, but it's not that easy. There's stuff I've had to teach him off camera because things come up and he'll text me. And so there's a lot that is just hard to cover at the end of the day on YouTube. And that's why my masterclass covers all of this. So that is located over inside my mentorship group. Now, if you are interested in learning how to become a consistently profitable trader, you can click the link in the description below, head over to my website. You can see everything that is included and go ahead and apply if you'd like to do so. But with that said, let's hop on inside my computer and let's talk about my software and give you access to it.
Let's do it.
So I am really excited for today's video because I'm actually going to be giving you access to what is my edge in the stock market, this software, which you're about to see today. And the premise here and really what I want to cover is how you're going to take the software and pair it with your technical analysis and what you've learned.
Okay.
If you guys don't know about my software, I made a video like 2 weeks ago breaking it down, talking about what this edge actually is, how the software works. But I've been trading on the software now. It's gone through different iterations, variations, but I've been trading based off of this edge for the last just about 4 years. So it was late 2019 is when we totally finished the development of it, and it took about a year to build. And so we got to the point where it's very optimized. And so over the last couple of months, I've slowly been giving out a couple licenses here and there to different students I have over inside my mentorship and letting them take it, implement it into their trading. And the amount of success so far that I've seen across the board from everyone who's had access, because up to the last couple of months, it was literally just myself using this and a couple friends, family members, whatnot. But today I'm going to kind of give you a very brief overview of how it's going to work, how you're going to take this and implement it into your trading.
Okay.
And then I'll give you access to about 5 hours of coaching videos that is really going to, help you get to where you need to be to understand how you're going to trade using this, just as I do. But just in general, we went ahead, we created your account. Obviously, you can see we've got sweeps. What you're looking at are essentially orders that have come through. Now, we're taking all of the option order flow data across the entire US. So all of these, and it's retail order flow. So all of the retail exchanges, Robinhood, Thinkorswim, Webull, anywhere you could.
When you mean retail, so not like the big Wall Street guys, right?
These are retail traders, not institutional traders.
Okay.
So these are guys like you and me, guys, girls that, have their own money that they're trading with. And we're taking all this data from all these different brokers. So the second you place an order to, buy or sell an option, we essentially take hundreds of thousands of orders. We've licensed all of this data from these different providers. But we have this algorithm which takes all these orders, we put them through this back testing engine, and then they're essentially filtered through, and we use different criteria, and we're able to determine essentially what orders come from which individuals. And so the question that I was trying to answer in the first place was, if there's guys out there with 20, 30, 40 million dollars, where are they putting their money? Mm-hmm. And when you look at an options chain and how you see the volume, say there's 5,000 in volume behind a contract, how do I know whether that is, one individual buying those 5,000 contracts, or whether that's, 5,000 individual people?
Okay.
So essentially we're able to see behind the order flow of the options world. And we were able to pinpoint using this engine we built, what orders come from which individuals. And we found that some people are putting on massive size behind certain positions, say buying $1.5 million worth of some Tesla calls that expire in 2 weeks. And what they are doing is essentially they're spreading that, say, $1.5 million order out across multiple brokerages. So they'll put 50,000 here, 150,000 here, 200,000 here. And there are two reasons why they're doing that. So the first reason is simply due to liquidity, right? If you have 100 or 1.5 in this case, $1 million, you're not going to be able to theoretically buy up that many contracts because there's not enough people to sell to you. And so by spreading out that order, they're able to essentially get in that position while at the same time and this is where the edge comes in. We figured these people were going through all this trouble to essentially hide this position, to mask this order by spreading it out across multiple brokerages. So
it's the same
in a
contract, just they bought it at a bunch of different brokerages.
Think about what would happen if you put in a massive order on some contracts. There would be a huge spike in the volume and the open interest, right? People would see that, algorithms would pick up on that. And this is the word I use, this matching engine that essentially all the data runs through is able to use certain criteria to then determine whether that, and it is called a sweep because whether that order came from one or multiple people, and what the sweep represents is the fact that someone is coming in and they're buying up all of these contracts across multiple platforms. They're coming in and they're sweeping up all of these contracts. So we realized okay, there's definitely guys out there that are trading massive portfolio size, could be $50 million. They're putting on huge amounts of capital, a lot of cost behind these positions, some being very, very aggressive trades where we know the basics when it comes to options, right? Inherently, there's more risk with contracts that have a closer expiration or contracts that are, say further out of the money. And so using kind of risk and certainty kind of paired hand in hand, we're able to see based off of the risk that is, behind this position, looking at the criteria when it comes to options, this guy is very certain about this position. Does that make sense? So anyone who just put $4 million on Microsoft puts that expire this week, they definitely
pretty
think
certain about
they're pretty certain Microsoft is going down, and the next morning when the market opens, they're going to be up or down. It could be $500,000, right? Depending on how much the stock moves. But we started simulating these sweeps over, the course of this year, and we found that some just yielded these crazy expectancies. These guys, girls behind these orders, behind these sweeps, out there trading, trying to hide this massive cost size. When you see cost, that's what the order size is. So someone just put $3.5 million on these FIVN calls. They know something that we don't, right? Obviously, insider trading is illegal, but there are people
that might know something
inside. And so the idea is what I started doing, and this is what you're going to learn to do, is taking this sweep. And this is how I actually find the stocks that I'm going to trade. They're just the stocks that come through, the sweeps that come through, right, on my software. And then I pull up the chart. And then based off of the chart, from a technical perspective, I try to identify whether there is a trade there or not. And if my bias, when it comes to the chart, aligns with the bias behind the sweep, for example, I identify my ATH pullback setup, which you've learned over the last couple of weeks. Okay, that means that I'm betting on a stock if it presents that setup to go down. Well, if the sweep is a put, if someone bought puts, that means they're betting on the price of that ticker to go down. Well, then my bias aligns with the bias behind the sweep. So it's really 50-50. I say 50-50 in the sense of half of my trading is everything you've learned up to this point. It's the technical side of things, those 3 setups that I'm trading, and then how to go about, looking at a chart and identifying one of those setups or not. And then the other 50% is taking the software and then obviously looking at these sweeps that come through. And based off of the criteria behind the sweep, we're kind of able to judge or gauge the certainty. And then we know, the stock that we're going to trade in the first place and what stock to actually look at from a technical perspective. And then we know what direction to bet on that stock going as long as our bias, right, aligns with the sweep. So this is my edge. This is, I will say up to this point, and you might have heard of order flow softwares or order flow algorithms. Up to this point, I haven't been able to find anyone that has been able to pull these orders that we do.
Okay.
And I think that has to do with the way we're actually first going about gathering all this data, collecting this data. But then I can't take all the credit, for building this. It was, myself along with a couple of other guys that really came in and made this happen. I had this idea of when I look at an option contract and I see this volume behind the contract, how do I know whether that's one person or multiple people. And then some very smart people helped me. Some very smart minds, let's just say, came together to actually build the matching engine. That's my term, to take all these orders across all these retail exchanges, filter them using this criteria, figure out they came from one person, multiple people. And then we found out that, oh shit, some people have massive portfolios.
Yeah.
Clearly, they're trading massive size. They're going through all this trouble to hide their order. Are they actually profitable or not? And then we paper traded all of these, simulated all of these sweeps out, found that some yielded higher expectancies than others, and that these people were actually making a lot of money. And so you'll see over time, it's pretty unreal to, watch as a sweep comes through, and then the next day you go back and you look at that stock, you reference that sweep, and you're like, oh shit, this guy, like literally you can look at the contracts. This guy just made whatever, a couple hundred grand.
Amount of money, yeah.
Yeah, it's insane. And
That's
so
crazy.
This is the software that, I'm going to teach you how to use, and most of the learning is going to be for you done through watching about 5 hours of content that I put together to help you, which we just simply can't put on YouTube. It's
Yeah.
too long. And I'm really excited to see you take this thing
Really excited.
and implement it into your trading. So any questions, or does that
No,
make sense?
makes sense.
What you're looking at now is obviously the current version that I'm trading on. So all the data is the same. The matching engine's the same. We're pulling the same sweeps. We've just added some functions and, made it easier to actually get people on this and let them use it. My long-term vision in this is a lot bigger than just, having a couple people use it. And I think there's some big things we could do with it.
Yeah, for sure.
But, pairing it with our trading, with my trading, with yours in the immediate term, this is going to help us find that edge, give us that edge essentially that we need to make money. So first, up here, we've got the call volume, the put volume. Very simple. You can see the amount of calls that have come in and then the amount of puts that have come in. So one thing that we can also utilize the software for is giving us essentially sentiment behind the overall market. So we could see whether more people are having a bullish, point of view or a bearish point of view. So you could see if there's more calls than puts. Well, generally more people are betting on the market or all these stocks as a whole to go up. So you can see the market sentiment today is bullish. And then you can kind of reference today. Okay, we're green on IWM, QQQ, we're a little bit red, SPY, we're a little bit red. And then you can kind of look and see, we'll get into the criteria, but I've seen this, the sentiment will be very bullish for like 4 or 5 days. Market will be red, selling off. And then all of a sudden we'll come in with this huge rally and all of these positions will just skyrocket.
Yeah.
It helps definitely to gauge overall market sentiment. This isn't like a buy or sell signal or anything like that, but 6 calls today, 2 puts today, 200% more calls than puts, just to give you some perspective on where people are putting their money, right? Because this is like a look behind the veil of
where people are putting a lot of capital.
This is, yeah, exactly. That's a good way to summarize it. So let's go first to add filters. Essentially, we want to keep exclude sweeps unchecked, keep exclude underlying stock unchecked, keep exclude underlying ETF unchecked. That means we're going to be looking at the sweeps. You're going to learn, obviously, what trade and flag means in that material that I'm going to give you. But we want to see sweeps. We want to see, obviously, stocks and ETFs. Okay, now this is all of the information when it comes to option contracts that we have the ability to look at. Now, I'll show you exactly what I look at, and then you can kind of decide whether you would like to check or uncheck, whether you want to see more information or not. But really, this is the baseline as far as what I'm going to look at to determine, whether that is a sweep that I want to take or not.
Okay.
So essentially, these are the filters that we're going to exclude, include. This is everything that I'm going to look at to make my decision on whether this is a sweep that I want to trade or not. So we've also got minimum cost ranges, expiration date ranges. You'll learn about all of that and what that means. So here's what we're going to look at. So we've obviously got the date. Okay, today is the 6th. The time, this is the time the sweep came in. Okay, second the sweep comes in, it comes through on the software. So you can see time for each sweep today, first sweep coming in at 9:45. Then we've got the ticker. Okay, so all of these stocks that are being traded. We've got whether it was a put or a call. Then we've got the strike price. Okay, you know what the strike means, obviously. And then we've got the expiration date. And then we've got the cost. So strike and expiration, those are going to be 2 of the variables that are going to help us gauge certainty. And then cost, we'll see anything between $100,000 to sometimes you'll see $5, $6, $7 million sweeps. So 126,000 to 3.5 million is kind of the range today. And then we have the price. Now, this is another very important variable because this is the price of the contract that was purchased, okay? So for example, this buyer just came in at 1207. They bought up the UAL puts. They bought the $45 strike, okay? These contracts expire on December 15th, 2023. There was a total cost of $180,000 behind this position. So that's how big the position was. And then these contracts were going for $360 per contract. And then obviously we're looking at sweeps. You're gonna learn the difference between sweep and trade and red flagged, all of that later on your own. And then the sentiment, obviously bearish or bullish, whether it is a put or a call. Bearish being puts, bullish being calls. So we can take out sentiment if you want, and then, it's up to you whether, like I said, you would like to add, remove the data that we have the availability to look at. So that's all I look at, though.
Okay.
Very straightforward. Certainty and risk. When it comes to the expiration, the closer to the expiration, those are going to be riskier contracts. They're going to be more volatile. They're going to be, moving faster. Theoretically, right? Based off of whatever stock is being traded. So if we are swing trading, that's the whole premise of what I do and what you've been learning how to do. We are going to want to stay away from any sweeps that expire the same day. And typically I'd even say the same week.
Okay.
Obviously, if someone is buying a contract that expires the same day, they're not going to be able to hold that position overnight because the contracts expire. Typically the same week expiration, those contracts are going to be so volatile where they're essentially just going to be too risky to even hold overnight. And when we use the Analyze tab and we actually simulate out the position, you can see that more than likely those contracts will get crushed if you're wrong. You'll make a lot if you're right, but
super risky.
I'm looking typically to not touch any contracts within 2 weeks out. Okay. So I'm looking to trade contracts that are over 2 weeks out expiration, and just know there's no right or wrong answer because it all comes down to your data.
Okay.
And like how you trade the sweeps. But we're swing trading, no trading same day, same week expiration, preferably 2 weeks out. The higher the cost, generally, there's going to be more certainty. There's more money behind that position. Theoretically, therefore, the outcome will be increased. The win rate behind, that, say, cost basis is going to increase. Generally, the smaller guys or the smaller positions when it comes to the software, I know 126,000
the little
is
guys.
a lot. The little guys. That is, a much smaller bet than, say, the $3.5 million bet. So kind of using that certainty aspect. And then the strike price, how far in, how far out of the money. The further out of the money, obviously inherently riskier. The further in the money, safer. So you'll see someone coming in with, say, $3.5 million. This guy bought up the FIVN calls, the $90 strike. Now, if you want to, if we go to add filters and display spot. Now, the spot is the current price that stock is trading at the point where the sweep comes in. So this sweep came in at 1207. UAL was trading at $41.50. Okay.
Got it.
What we can kind of look at, obviously, is if it's a put, someone comes in buying both puts, we're going to look at the spot, and based off of that, we know whether they're in the money or out of the money. And then the same thing goes for calls. Okay, you can look at the spot, we can know whether they're in the money or out of the money, or you can just look at an options chain. I actually don't even have spot on here because I'll just pull up the options chain on TOS and look at it. So essentially, the further out of the money, the closer to the expiration, the higher the cost. That's a lot of risk, a lot of certainty. And then the further in the money, the strike, the further out the expiration, and the smaller the cost, that's less certainty. And so think about it like this. If you see someone come in, they buy up some contracts that expire in 2026, and they're very deep in the money, ask yourself, do you think that move is going to be happening within the next 3 to 5 days, knowing that generally you're swing trading, you're going to be trading the way I do, my optimal hold period is between 3 to 5 days. Do you think that move is going to come within the next 3 to 5 days? They're betting on that move. Yeah, they're betting on that move to happen like over maybe the next couple of months. So keep that in mind too, based off of the way you trade and looking at the contracts. I just know if I was going to be trying to capitalize on a long-term move, say I'm trying to capitalize on maybe a 10 to 15% move on a chart over the next 3 or 4 months, I'm going to buy contracts that are super far out, very far in the money. You're going to get a feel for looking at the cost, looking at the expiration and the strike, gauging certainty and risk. And then based off of those factors, well, we can then go about pulling up the actual chart. Okay, so whatever the stock is, and looking at the chart from a technical perspective. So I want to run through a couple examples, and we'll even just go through all the sweeps that have come through today. So we'll look at the sweep, kind of identify the criteria, kind of look at the variables, right? That I look at. And when I say variables, really it's the strike expiration cost. And then we can even look and see what the current price of the contracts are trading at. So if this guy got filled at 360 a contract and we see they're going for 450, maybe that move has already come and gone.
Yeah.
Right? Does that make sense? So we want to make sure we're not getting in a position that might have already happened.
Okay.
Because without being the broker, you'll never know when these guys are getting out of their position.
Yeah. It could be impossible. Like a quick, same day thing.
That's the thing. Even someone could theoretically come in and buy contracts that expire in 2 years and sell them 2 minutes later.
We just don't know.
Keep that in mind. We don't know. But we know what stock they're betting on. We can gauge certainty and risk. And then we can decide whether, based off of our technical analysis, everything we know, that's a trade we want to take or not.
For us.
And that's our edge.
Okay. Makes sense.
Cool. All right. So I'll run through the first couple, and then I'll have you run through like a couple more.
Sounds good.
All right. So we've got RPHM calls. So let's pull up RPHM. Okay. So right away, it looks like we're kind of trading in the middle of this chart.
It's kind of
in the
choppy
sense of, the lows at 508, the highs at 1130, very choppy.
None of the moving averages
not
are
clean.
respected.
No moving averages respected. Direction isn't clear.
Let's do it. Let's trade it.
On to the next one.
On
right?
to the next one.
So our next sweep, Microsoft puts. This guy bought up the 410 puts expiring January 19th, 2024, $676,000. And these contracts are going for 3.8K. So they're more than likely pretty far in the money, just knowing Microsoft and how those are typically priced. Let's go ahead and pull up Microsoft. What do we think here?
What was it? It was a call or was it a put? I forgot.
Now, this is something I'm going to have you do when you go to practice. I want you to hide whether it's a call or put. So I want you to hide. Whether it's a put or a call, and I want you to hide the sentiment. And then I want you to look at the ticker, pull up the chart, look at the chart. What is your bias on the chart? Is there a trade there or not? If yes, then let's look at the sweep. If no, let's look at the sweep. And if the sweep doesn't align with your bias of the chart, you cannot take the trade. That is very important. So what would your bias be behind this chart?
Well, I do think it would be a put because first off, it broke through that 50, which was respected a little bit, but it also just hit that all-time high.
Okay. But is there a setup here? ATH pullback, ATL bounce, pullback play. No. We're trading too far off the high. There's nothing here. This chart would be the closest to the ATH pullback, but it's not. Are you getting this? It's pretty straightforward. All right, next, DAL. Now this guy bought up DAL calls, the $45 strike expiring 4/19/24, about $1.2 million on this position. Filled at 125 a contract. DAL. And what do we see here?
Nothing much.
Nothing. Okay. No setups.
No.
Good. So you're getting good at identifying whether there's a setup or not. Okay. IWM. Now this is kind of my rule of thumb: is I don't trade SPY, QQQ, or IWM.
Noted.
Okay. Those are ETFs. Now you can trade ETFs, but I would stay away from those three. Okay. VEEV. Now notice how we're not even wasting time going in and looking at, the fill price, what the contracts are currently trading at, gauging risk, gauging certainty. The first thing we want to do is just look at the chart. Is there something there or not?
No.
Is it worth our time? No. This is way too choppy. No clear direction. No moving averages respected. No pattern. No trend. No setups. Nothing.
Nothing.
All right. On to the next one. I'll have you do this one. This is a big one. $3.5 million in cost.
How do you do the
That's a lot of certainty.
exit?
Hit this. Whoa, what's going on there?
Nothing really respected. It just hit an all-time high, but it's super choppy.
And it looks far off that all-time high.
Yeah. It's way back down at 81.69.
What do you think?
No.
Dang, that was a big sweep. So this is something that I think you'll be good with this, but don't get FOMO behind the sweeps.
Yeah.
There's a way you can misuse the software. Just jumping in on the sweeps when they come in and being like, letting your bias just, I guess, disregarding your bias behind the chart, what by looking at it from a technical perspective, disregarding that, and then just taking the trade. And one thing that I do is I enter all my trades between 3 to 4. So even if the sweep came in at 10 o'clock in the morning, I'll look at the chart and then I can see, well, maybe this move has happened or not. And if the move hasn't happened, if there's actually a setup there, a trade to be taken, and then, I'll go about creating my trade plan, stop loss, take profit. I'll first start by typically simulating out the exact contracts that the individual bought, getting, the upside and the downside, putting those into my risk management algo, which you're going to also have access to soon. And then I'm going to take the trade or not based off of whether I can. So we'll do the whole process. We'll go through the whole breakdown eventually, everything A to Z. But let's go on to, PSTG.
So choppy.
Choppy. And we've got a lot of choppy charts. Don't like it.
DIA.
Yeah. I think it was there.
This one's better, but just hit the all-time high. It's still choppy though, right?
Let's look at the immediate trend. Okay, the immediate trend is pretty clear.
Yeah.
Because we're not, obviously, the longer we've seen a pattern play out, the longer a trend has played out, the longer moving averages have been respected. This is going to help us obviously determine how or whether those levels will hold or not. But when it comes to our trading and knowing that, we're looking to swing over 3 to 5 days, the margin for profit we're looking for is not really going to ever dive down into that 10, 15% below where we're currently trading or above. We're not really going to have to take into consideration anything that has happened really 2-3 months prior. So let's look at the last month or so, look at the immediate trend, and we can see we've started respecting averages. The trend is very clear pattern of higher highs, lower lows. Recently formed an all-time high in the 4-hour, trading above the 15-day EMA, which is respected. And we can kind of make a decision. Well, first off, what's the setup? What's the bias?
All-time high pullback. Bias meaning
What direction would you bet on the stock going?
down.
Okay, so let's look at the sweep.
They did a call.
Okay, your bias on the chart doesn't align with the bias behind the sweep or the direction of the sweep, right? So that guy was betting on DIA to go up, and you would bet on it to go down based off of what you're looking at from a technical perspective, which means this isn't a trade that you would take. So that's everything today so far. Okay, it's 1:30. We've gone through all the sweeps. I think over time, and depending on the days, some days there'll be more volume of sweeps, some days there'll be less. And over time, you'll get faster at going through. It takes me probably 15 minutes to go through all the sweeps that have come through on that day really quick. And then I'll build out my watch list. So essentially, if you go to your watch list, this is how I do it, how I like to do it. If there were any sweeps that you liked right away, you identified a setup before even looking into them any further. And this is all the stuff you're going to learn through the curriculum I put together just for you. You're going to add that stock to your watch list. And then once you've gone through all the sweeps, whether it'll take you 10, 15 minutes, say you're going through the sweeps every day between 2:30 to 3, and then you're adding all of the ones that you like to your watch list. And then, from 3 to 3:45, you're actually figuring out that whole trade itself and doing everything, like the whole process and putting on the trade or not.
Okay.
So there's nothing so far, but we'll, check back in later today and look. But do you have any questions for me as far as how you're going to pair my software, my edge with your trading, the technical analysis?
No, everything that you explained to me so far makes sense on how I'm going to use it. I am intrigued to see what the 5 hours of learning is going to have in store for me and what I don't know.
Okay.
But so far it makes sense.
Okay, good, awesome. So that's everything I want to cover in today's video. Now, next week, you're actually going to start trading, okay? You're going to start trading. I'm excited.
I'm excited.
I hope you are. I'm going to give you a week to really dive into that curriculum I put together. You're going to learn how to fully utilize the software, trade using it how I do. But generally, that was the overview. That is what my software is, my edge in the market, how I've found that consistent profitability year over year. And now you have access. So again, this isn't for sale, but all my teaching and everything that you're learning, that is all over inside my mentorship group, which will be the first link in the description if you guys are interested in learning more. And if you want to become a consistently profitable trader. So we hope you guys did enjoy this one, and we will see you in the next video.
Bye, guys.
Later.